If S Corp status is just an accounting question, which I guarantee you it is, why am I sitting here as a small business lawyer talking about it? My name is Maritza Shea Nelson, and I'm a small business and nonprofit attorney. I help entrepreneurs, founders, dreamers, and innovators pursue their passion without worrying that all the legal stuff, like the rules governing S Corp and whether or not you're compliant, might come back to bite them. Well, one, it's a question that I get all the time. I cannot tell you the number of people I've talked to. We've set up their business, most likely as an LLC because it's the entity type that makes the most sense these days. And then they come back in and go, "You did it wrong. My accountant said I'm supposed to be an S Corp." No, we didn't do it wrong. You're both. For legal purposes, you're an LLC with all the limited liability that comes with. For tax purposes, you're being taxed as an S Corp instead of a disregarded entity. You might notice that when you go check the Secretary of State's website, you cannot create an S Corp with the Secretary of State. It is not a legal entity. It is a tax status. For liability purposes, you still want to have your LLC. But the other reason that I'm talking about it is that any of the fiscal advantages that might come with electing to be taxed as an S Corp are not free. Okay, the IRS is not just giving you a windfall out of the kindness of their hearts. You are trading the incredible flexibility that's inherent in the LLC structure for some very rigid constraints that come with the S Corp rules. An LLC actually has very few formal requirements. It's one of the reasons why they've become so popular in this day and age, and is the reason why we set up 99.9% of new businesses as LLCs. An S Corp, on the other hand, that tax status is governed by the Internal Revenue Code, and that's subject to significant, strict limitations on ownership, equity, and operation. And if you fail to strictly adhere to even one of these limitations, the IRS can terminate your S Corp status. If your S Corp status is terminated, you automatically convert to a C corporation for tax purposes. That's the one with the double dreaded taxation problem, where the corporation files a tax return, pays income tax on its profits for the year, and then when it distributes money to you, the owner, the shareholders, what we call dividends, you get to pay taxes on that money again. That's the reason why we don't really see small businesses get set up as C corporations anymore. So if you lose your tax status with the IRS, you automatically become this the C corp, and you're generally barred from electing S corp status again for 5 years. So while the tax savings with an S corp might be great if it fits your particular circumstances, the compliance burden is absolutely real. And this is the part where I feel like so much of the get rich quick generic business advice that you'll see floating around social media doesn't really talk about. So let's dive into the major pitfalls that cause small businesses to accidentally lose their S Corp status, the rules around who can own your company, and how your ownership is structured. My clients range from startups to growing businesses and nonprofits with nearly 100 employees across a wide variety of industries. If you love what you do and you want to build something amazing without running afoul of the IRS, then let's talk. Check out the link in the description to schedule a consultation, or if you're not quite ready yet, download our 10-pillar post-formation legal checklist to help you spot this and other issues that could be causing problems in your business.